Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, May 30th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. Before we get to the charts, I do want to point your direction to pivotboss.com/profits. Right now, we have a tremendous flash sale for Swing Trade Pro 2.0. 29% off right now for new members, and we have live sessions coming up in June as well. Take a look at pivotboss.com/profits. You'll see this page here. You can take advantage of the flash sale regularly, $697 right now, $497, a tremendous deal for this tremendous training. Swing Trade Pro 2.0 includes on-demand videos that are already ready at your fingertips. You have a 135-page Swing Trade Pro 2.0 PDF, which includes 10 of our trading blueprints. All future live sessions are also included, so those of you who are already members of Swing Trade Pro 2.0 will gain access to our upcoming live sessions from June 12th to June 18th, 2024. The live sessions here, you can see the calendar right there. This will include our new option spread blueprints, which we will use with our trading blueprints that are already included with your training. You can see the schedule here of the live trading sessions. Additionally, for those of you who are new members and take advantage of this flash deal, you will also receive a free month of our premium trading room as well, which is a $99 value. So tremendous value right now. Take advantage of this flash sale as it will not last long. All right, let's take a look here at the charts. Right now you'll see the ES here trading below the narrow multi-day trading range here that has developed over the last 2 weeks. This is a 9-day trading range right here. We got a modest downside break to the downside from that range yesterday, if you can call this kind of a break. At the moment, this range right here forecasts about 200 points of range. So there's 200 points of energy inside that range. And one thing we talked about here last Thursday on the day one high, this was a day one rejection. We mentioned Friday there could be a pullback to the midpoint of that range, and when we come in from the holiday on Tuesday, we could be looking at a failed new high, which could lead to some weakness up ahead. And if this narrow range here starts to unravel to the downside, we could be looking at a return back to the May FOMC key level below, which is 50.53s. That right there is the upcoming target, and to break to the downside here would suggest a 200-point move. You break to the downside through 52.50, you open up 50.50. So there's a 200-point move right there. There's enough energy built into this range already to open up a 200-point move to return us back to the May FOMC key level. Right now we are seeing a little bit of a pullback here from the lows, the overnight lows of the session here. GDP just came through a little lighter than expected. Initial jobless claims a little hotter than expected, and we have crude oil inventories coming up here later on in the session as well. Now, the idea here would be any pullback this morning could be an opportunity for bears to defend and see an inverted check mark trend day to the downside. If this thing starts to work its way down and breaks through 52.50 here today, we could be working our way downward toward that 50.50 May FOMC key level up ahead. So keeping an eye here on any morning strength. That morning strength could be seen as an opportunity for bears to defend and rotate this thing back down. Looking at the NQ, the NQ also has a narrow range here. You can see right there. It's still inside that range. We still have an upward trending bias here out of the NQ compared to the other markets, especially we are inside the bullish Pima trigger zone. The tendency here would be usually to buy that dip and rotate it to new highs. However, again, we are trading in this box at the previous quarter's high, and we haven't really seen much traction to the upside. We came in with a Thursday strong high, and that day one strong high could be an indication that we ultimately rotate this thing back down. Now this range here, if we were to quantify it, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, a 10-day developing narrow range, we can set this to 10 days right here. Apply that setting change, and you'll see right there the compression that we're seeing. This is about 1,000 point buildup of energy. So 1,000 points are built up into this range at the moment. If we were to see a 2-week move, it could be about 1,000 points of range at the very least here. And if you start to break down through 18.6 at some point here soon, 18.6 minus 1,000 points puts you at 17.6, and then that gets you very close to the FOMC key level below, which is 17,460. So again, that level right there coming into view. So we have enough juice to start working our way back to the May FOMC up ahead. So right now, a 2-week narrow range developing here. If this thing starts to fail through 18.6, that could be a problem. Given the recent couple of days of weakness here, at least especially the previous session of weakness here, any pullback this morning could be seen as a selling opportunity for an inverted checkmark day down. If you start to break through 18.6, we could have about 1,000 points of weakness up ahead at the very least. Looking at crude oil. Now crude oil here with a couple of great days of movement. The previous day here, or at least a couple of days back, we were looking for this thing to rally toward 80. It had enough juice to rally toward 80, especially from the new lows down here. We got to 80, closed above it for the first time in a long while. And what we were looking for here was a failed new high, a fade after trend day, a failed new high thrust reversal that could rotate us back to the previous session's midpoint. It hit the previous session's midpoint to the penny yesterday. The low, 78.99. The previous day's midpoint, 78.99. So again, it was a perfect fade after trend day, a perfect thrust reversal sell signal here, and a rotation back to the midpoint of that range. And now the expectation for today is any strength would likely be sold. We were looking for anything into 79.50 or maybe even 79.60 to sell it for an inverted checkmark day down into 78. Looking for about $1.70, $1.60 of range, somewhere in that zone, $1.50 of range, but no more than really that. We've been trading in about the $1.50, $1.75 zone of range. So inverted checkmark day down toward 78. At the moment, we have a little bit of an expanding range developing with a downward bias. Bears defending the top end of the range. And another thing that's very clear here is we're developing an expanding range down at these lows overall. So from these highs here, you have these lows here, and you have yourself a great expanding range. With that rejection here, you not only go back towards 78, but we could be looking at a test into 76s, which could then lead us back up the range down the way. So expanding range in full swing at the moment, looking for a follow through towards 78s. Now gold futures here currently flat on the day, but showing signs of a reversal from the lows, the overnight lows. This market here has been a little tougher. We had a rollover gap up which filled, and we're now back kind of stuck at the center of the range. We have a very good range here, 24.50 on the top end. Here's a 23.50 here, and then you go a little bit lower here, 22.75, kind of that lower end. So somewhere in this zone here, you have the middle of the range, and this is where a lot of chop could happen. Again, not the best in terms of trade location right now, but we still have an upward bias overall. If we were to rotate down into 22.75, that could offer a tremendous fade back up the trading range. But right now, stuck in the middle of the range, so you have to beware of the chop. Looking at the YM, you'll see the YM right now has seen the most selling pressure of any of these markets right now. It had this 4-day narrow range and then started to break to the downside almost immediately. Massive elongation to the downside over the last several days. Meanwhile, the ES and the NQ are still stuck in their 2-week narrow ranges up here. This thing has already flowed to the downside and has come within a stone's throw here of the May FOMC key level, which is 38.110. Almost reaching that level here this morning, reaching 38.140, so 30 points off that level. Major elongation, especially kind of a late day puke here out of the YM, where it had a range of about 422 points all day long, and then right at the end of the session it dropped tremendously, getting to nearly 700 points of range for the day. The elongation here has been tremendous out of this one. If you look again at the previous session's range, and the range over the last several days, it's been mostly 125% or more. And yesterday again, about 700 points of range here. Let's see, 699 points of range yesterday by the time it was all said and done. So today could be mostly a digestive day for this one with a downward bias. Again, still looking for that 38,110 to be hit. And that's something we talked about before. If it's going to be taking bid and we go to the edge, we'll go to the edge until there's a reaction that returns us back to that level for a big test. So big time weakness out of this one. And once we do hit the 38,110s, the fact that we've broken through 38.8 opens up 37.8 down below. So 37.8 could still be ahead for the YM. Alright, a quick look here at Bitcoin. You'll notice here with Bitcoin, this thing is compressing right now in a very narrow range. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10-day narrow range for this one. Another compression here that could be opening itself up for a expansion phase. An expansion phase here could be ahead. And if we got an expansion phase, a 10-day narrow range, and it's not super narrow. I'm bringing it all the way back to here on a 10-day basis, 71%, not 65 or below, but that's 12,000 points right now. If we were to make it, say, an 8-day narrow range, perhaps it gets a little closer to that 65 mark. Right there, 66.9, and that's still forecasting a move somewhere in the 11,000 point range right there. So 11,000 points of potential range out of this one. That's huge. That's huge right now for this compression. You think about 11,000 points right here from 69, 68, and you're starting to talk about 79 up above, which would be a new high. 74 is right here. If it's going to drop back within this large trading range, then that would bring you back toward that 57 recent lows. So there's enough juice right now to bring you back 11,000 and retest the lows of this range. So a lot of compression right now. The uptrend is still intact, but we're still stuck and confined to the boundaries of this range. If we look real quickly here at ETH, compression here as well. 1, 2, 3, 4, 5, 6, 7 days. 7 days compression after that massive rally here. We can bring this down to 7 here. And you can see right there 60% of ADR and the potential for another 1,000-point move out of this compression here. So enough energy for 1,000 points of movement. Again, if we were to break to the downside, say through 3,600, that could open up a 1,000-point move to the downside. But again, this thing is flowing up on hopes that an ETF, a spot ETF, or a few may be approved here sooner than later. That could open up quite a bit of upside. So right now, stuck in the range at the moment, building energy with the potential for a breakout move up ahead. All right, that is it for now. Please visit pivotboss.com/profits to take advantage of the Swing Trade Pro 2.0 flash deal. It's a tremendous deal here, and we have live sessions coming up in June. Everyone have a fantastic rest of your day, and I'll see you in the trading room. Take care.